The Nifty Next 50 index emerging as the hottest stock gauge in India. The market made up of potential candidates for the benchmark gauge is hovering near record highs, with forward profit estimates climbing 20% so far this year. Let's get more from Bloomberg's Ishika Mookerjee. Ishika, tell us more about this Nifty Next 50 index. Why it's all the rage right now.
Hey Has, the Nifty Next 50 indeed is all the rage right now. The index is up 18% this year versus the Nifty 50, which is the Indian stock benchmark. The Nifty 50's advance of about 4% this year. The main reason really is the earnings excitement around the Nifty Next 50, which, as you said, is made up of potential candidates to get into the benchmark index. So it's got earnings upgrades of upwards of 20% this year, which is by far beating any other index in India. Now, these stocks in the Nifty Next 50 index are the main beneficiaries of, Narendra Modi's push for making the Indian economy bigger and better. They're the ones that are going to benefit the most from economic growth of 7% in 2024, which are the consensus forecasts right now. Industrials and materials stocks have a high weighting on this index, and that compares to the Nifty 50, where IT services firms, which get a lot of revenue from overseas, are among the biggest components. And this is one of the key reasons why this benchmark, Nifty Next 50, is really seen as a direct play on India's economic boom.
So there is interest from foreigners as well. How much interest is there when compared to local investors? Are they the ones driving at this point in time?
Yeah, what's interesting is that foreign investors have typically played among the biggest stocks in India, right? The large cap ones, which are in the Nifty 50. But what's happening is, with rising valuations in the market and people looking at these stocks as crowded trades, foreign investors have actually diversified and are looking at the stocks in the Nifty Next 50 index, which, by the way, is expected to see earnings growth of near 40% over the next 12 months, which is again more than any other benchmark in India. And Sanford C. Bernstein did some analysis and saw that foreigners are particularly getting into Hindustan Aeronautics, getting into Bharat Electronics and Canara Bank, like these kind of names within the Nifty Next 50 index. So this is becoming more of a playground for foreign investors than it has been in the past.
When the surge is so rapid, Ishika, you talk about risks. What are some of the risks to the rally?
Absolutely. There are many risks on the horizon. One is, of course, that, this pocket of the market hasn't seen a correction yet, unlike the small cap stocks in India. And there is bound to be a bout of profit taking after a 65% rally over the past year for the Nifty Next 50 index. Secondly, the earnings potential needs to be matched by actual increases in corporate profit. So if investors see that the earnings aren't coming through, they're likely to take their money away and out of these companies, especially as other markets such as Japan in Asia are booming, and China, in fact, is also rebounding. If this rebound in China seems more sustainable, you could see tactical flows coming out of India and going into China. And the Nifty Next 50 is for sure a candidate for investors to take some profits out of.